Welcome back to the Wall Street Podcast. Today we're opening up a new deep dive. This one's based on a flash report from Citi Research. It came out September 25th, 2025, and it concerns ZHIHU, that's ticker ZHN. So this analysis, it synthesizes the main points from Zhihu CEO Zhu Aiyun's recent 36QR interview. It really zeroes in on the company's, twin strategic tracks, hitting sustained profitability and integrating AI carefully.
Right, while preserving that core content quality. That's key.
Exactly. And Citi seems pretty confident. They're reiterating a buy rating, target price of US $7.
Which suggests what, about a 34% upside from the closing price on the 24th? US $5.22?
Precisely, a 34.1% potential return.
Okay, so let's maybe unpack this. The first pillar you mentioned, profitability. The CEO stressed it's, critical, not just a goal, but like a shield against market pressures.
A buffer, essentially.
Exactly. And what's interesting is the specifics. They're aiming for break-even on adjusted operating profit.
Not just adjusted net profit.
Correct. That's a tougher metric.
For our listeners, why focus on operating profit? Why does that matter more here than, say, net profit?
Well, it's about the core business, you see. Achieving operating profit break-even proves the fundamental model, the community, the content, is viable on its own. Before you factor in things like interest income or investment gains, which can be volatile, it shows true commercial health.
Got it. Core sustainability. That leads us right into Pillar 2 then, navigating AI. They're emphasizing human-generated professional content. So how do they plan to integrate AI without undermining that? What are the ground rules?
Yeah, they laid out two core principles really focused on community trust. First, any AI-generated content, AIGC, must be clearly labeled. And it absolutely cannot impersonate a human user.
Okay, transparency first. Makes sense.
Definitely. Second, AI isn't meant to replace creators. It's supposed to empower them. Think assisting with fact-checking, data visualization, cutting down on repetitive tasks. So humans focus on the deep, valuable stuff.
Right, augmenting, not replacing. But look, this long-term stability, it needs a solid financial footing. Let's talk about the cash situation that underpins this strategy. What financial metric does Citi find attractive right now, given the push for operating break-even?
It's really their balance sheet strength. As of June 2025, Zhihu reported net cash, around US $650 million.
Wow, $650 million. How does that compare to their market cap?
Well, that's the striking part. It's actually 42% higher than their recent market cap, which is about $458 million.
Right, cash exceeds market cap by that much. $650 million cash versus $458 million valuation. That's a huge buffer.
It is a massive buffer.
Doesn't that sometimes raise flags, though, like inefficient capital use or maybe makes them look like a takeover target?
It can raise those questions, absolutely. And that's precisely why the CEO's renewed, specific commitment to operating level break-even is so important now. It's meant to reassure investors about how that capital will be used, or rather, conserved. The cash buys time, provides insulation while they prove the model works.
Okay, makes sense. Protection while they execute. Let's shift to the future revenue side then, the AI part. Beyond just helping current creators, what specific AI initiatives are planned to, unlock value from their content library, monetize it?
They have three key things planned, supposedly by the end of this year. First, upgrading their AI search, making it capable of deeper analysis of all that community content.
Okay.
Second, building a cross-media knowledge base, so supporting text, audio, video formats more effectively. And third, launching new AI features fully integrated into the core community functions, perhaps pushing into services.
Those sound ambitious, but how do they avoid the trap? Turning the feed into just ads or low-quality commercial content, which goes against their quality promise.
That's the core tension, isn't it? And it's the main risk Citi highlights, too. Success hinges entirely on whether these new AI features enhance knowledge access and quality, maybe through better expert connections or services, without degrading the user experience.
So it's a fine line.
A very fine line. If it just floods the site with generic AI content, the whole premise fails.
Right. So let's bring it back to the valuation. How did Citi land on that US $7 target price, especially compared to peers?
They're using a forward price-to-sales multiple, specifically 1.4 times 2026 estimated sales.
1.4x. How does that stack up?
Well, they applied that at a 25% discount to its closest peer, Weibo, which trades at about 1.6x forward sales, and it's an even larger discount compared to Bilibili, which is around 2.2x.
Why the 25% discount specifically versus Weibo?
It seems to reflect two main factors. First, the sort of broader re-rating happening across Chinese internet stocks. Valuations have compressed. And second, it acknowledges the execution risk we just talked about, that challenge of balancing monetization and content quality using AI.
Okay, that valuation context is helpful. Finally, let's think about the wider impact, beyond investors. Zhihu's strategy, especially strictly labeling AIGC, feels like an attempt to preserve a certain kind of on-lane space. How does this potentially impact the general public, everyday users?
Well, it directly tackles that huge societal issue of information credibility online, doesn't it? By trying to keep a space where professional, verifiable expertise is valued and can, ideally, translate into social capital, they're betting against the flood of often unattributed AI content.
It's like a bet on scarcity in a way.
Exactly. In a world drowning in AI-generated volume and speed, they're doubling down on human trust and verifiability.
So the final thought here really is, the long-term success of this whole model and Citi's positive view, it all comes down to one thing. Will the market, and will you, the users, continue to place a real premium on professionally curated, verifiable knowledge?
Especially when everything else seems to prioritize speed and sheer volume above all else. That's the big question.